Hi guys, John here from forecastfortomorrow.com. I want to thank you for joining with us. Apologies for not updating our YouTube channel. The reason being is because we're helping people prepare and profit through this economic crisis you're seeing. If you think and you keep listening to Obama, believing his lies and BS coming out of his mouth about the economy getting better, you've got rocks in your head. That's simply not the case. This week we saw a lot of reports after the market did see a bit of a drop that the officials are going to try and stop short selling. Now, there's several reasons, but there's a man, Christopher Cox, who was the chairman of the Securities and Exchange Commission, and when we actually did see the market crash in 2008, he was saying and revealing that the worst thing he did in all of his career, towards the end of his career, was put a 3-week ban on short selling stocks. Now you're probably thinking, how can that be a bad thing if you're going to ban short selling? Well, it really isn't that complicated at all. But you see, the biggest problem here is a lot of the officials and the political system that runs the stock market and the people behind the scenes, they really do not understand the markets. And when all this selling occurs, like we've seen recently, the blame game starts. People just tend to blame all the short sellers that are shorting bank stocks. And when they put a ban on short selling, it really only alleviates the problem in the short term. It's basically, all it really is a temporary ban and a temporary fix. And it's not really helping with the long-term situation about helping the economy and helping the market stay above water. And all it really is a political smokescreen. And what these officials really aren't and trying to do is to try and address the real causes of the current economic crisis we're seeing. That is the real problem here. It really shouldn't be about the governments trying to ban all these things and put regulations on all this short selling, or choosing to protect which sector or not to protect, like the banking sectors or the industry sectors. The reason is that the stock market, the global stock markets, are actually designed for both the long-term and short-term investors out there. And this banning of short selling is just an artificial constraint. It's these officials' justification for why these stocks fell really hard in 2008 and the really hard selling we've seen as of late. How about fixing the fundamentals of the banks? How about stopping these criminals from their ridiculous acts and what they're trying to do? Even after 2008, there's still banks that are doing criminal things to try and get money back. That's where the real problem lies, not with the actual traders out there shorting big amounts of stock. Because you have to remember, there's long-term investors out there that do already own, say, bank stocks, and they see what's happening at the moment and they're offloading. So they're not short selling, they are real sellers that are coming onto the market. And they're offloading these stocks because it's probably dangerous to be holding them. If you owned $1 million worth of Bank of America stock and you thought it was at risk of dropping 20%, well, wouldn't you sell these shares too? It makes pretty much sense to me. And all they want to do is just put the blame out there, because they can't afford for these so-called too big to fail institutions hitting rock bottom now, can they? And people are pissed off with all these bailouts. Could you imagine if they had to do another bailout of a financial institution? Hint, hint. And I guess the real classic example of what I'm trying to tell you today and the information I'm putting across is 4 days after the collapse of Lehman Brothers in 2008, short selling was banned on 799 banks and other financial institutions that were listed on the stock exchange. And the reason why the ban of short selling actually failed in this situation was because the prohibition curbed the amount of shares borrowed during the 3 weeks prior. So while banning short selling was a good short-term fix, soon after the stocks basically just resumed back to their large size sell-offs and drops on the market. So you can see a classic example here is that the costs of banning short selling far outweigh the benefits in the short term and also in the long term. Anyway, this is John from forecastfortomorrow.com. I want to thank you for joining with us today on our YouTube channel. If you want further information on how you can prepare and profit in this current economic crisis, head over to our website. It's www.forecastfortomorrow.com. The link is in the description. Thanks for listening. Have a great weekend, and I'll talk to you all very soon. Okay, bye-bye.